Good morning, everyone. It's Ben Buckner and Dan Bossi with Ag Resource Company in Chicago. Welcome to Thursday, September 25th. Grain soybean market's a bit higher. We are trading very much back and forth on the nuance and details of news from Argentina. And Dan, I suppose the markets have been open this week, of course, but overall they've done very, very little. We are still very choppy and trading in very narrow ranges. So I will pass it to you. Go ahead and break it down why you're seeing the fluctuation from day to day.
Yeah, Ben, thanks. I think as you think about the market, the big Monday down, of course, was as Argentina cut its grain export taxes to zero. I'm just shocked. I mean, when you think about it, Argentinian farmers engaged and did $7 billion of commodity sales all within 2 days. All those were booked and registered. Now, of course, the exporters have roughly 3 days to go out and make sure that they deposit 90% of those dollars in Argentinian bank accounts. And that will give Milei some extra war chest, if you will, against speculators in terms of holding US dollars. So Milei is looking like a magician at the moment because he was able to get this done so quickly. And he got a US deal for $20 billion out of the US Secretary Bessent and US President Trump. So it's a good day in Argentina, though again, I think the US farmer needs to be awake and that the Chinese did buy a significant amount of soybeans from Argentina. Even though the export taxes are back on this morning, I believe the reverberations of the $7 billion of sales will be important looking forward. When we look at it, Ben, it really breaks down by commodity to this. They did about 8 million metric tons of soy meal registered under the 0% tax rate, 4.6 million tons of beans, 1.5 million metric tons of oil, 1.6 million metric tons of corn, and 3 million metric tons of wheat. That is a slug for a couple of days. So again, remember that this is registered for export. Really, the only sales that occurred of size or substance was about 2.5 million metric tons of soybean sales to the Chinese. So China was able to book what it needed to, at least for November. I wouldn't be surprised if China buys another, maybe 1 or 1.5 million tons of Argentinian beans late November, December. But the Chinese is again pushing the United States out of the way with Argentinian supplies to fill the void. Now, the U.S. is missing that 13 million tons, or let's call it 480 million bushels that we sold last year. That was you can see that, of course, footprint statistically in the weekly export sales report. But as we go forward here, I think the other important factor here this morning is that China is finally confirmed. We've been talking about it on this webinar, podcast, whatever you want to call it, or our wires, that China was holding back on U.S. soybean purchases because of Trump tariffs. The reciprocal tariff, not so much, but it was the fentanyl tariff of 20% that China raised its tariff to 23%. And that was really the big bugaboo as you think about why they're not buying. Now, this worries me because Trump is unlikely to drop his fentanyl tariff. That 20% is bringing in $90 billion a year. If China were to buy the same amount of soybeans they did last year from the United States, that's $9 billion. So again, Trump is better off just keeping his fentanyl tariffs and then paying the U.S. farmer. And I think that's what the market will think about as we go through the end of the week and early next week. Now, remember, China's on holiday on Tuesday, and we do have the USDA stocks and seedings and small grains report out on the 30th, which is Tuesday. So just so everybody's aware of what's ahead here for the marketplace. As you think about export sales this morning, they were strong, 19.8 million bushels of wheat, 75.7 million bushels of corn, only 26.6 million bushels of beans. The beans were disappointing. We're now down about 240 million bushels on bean sales relative to last year, but we're up nearly 450 million bushels on corn sales. A lot of the corn purchases last week was Mexico, which took nearly 1 million metric tons of U.S. corn. So the destinations bother me a little bit, and people are buying ahead. But remember, Mexico has this cattle herd on the other side of the border that needs to be fed grain. So maybe there's room yet for the upside on corn, but there's no correlation between U.S. corn sales at the end of September and what the final number will be. So we have good sales to start out with here, but it doesn't tell us a lot in terms of whether USDA's 3 billion bushel export estimate will be correct. As you look at U.S. weather, we are looking at dry conditions for the next 10 days. This is a 7-day forecast from QPF, the NOAA forecast. Again, the U.S. harvest should kick into a higher gear, move farther north. We expect that, states like Minnesota, South Dakota, Wisconsin, Michigan, Nebraska will be going at full bore this weekend. We would imagine there'll be additional hedge pressure. What bothers me nearby is that the U.S. farmer is woefully undersold. And so if we get a rally in the market, I would imagine that he will be engaged and make some sales. So again, I doubt the rally can get too far from us here. Maybe 430 on December corn, 1025 in November beans, 535 or 530 on December Chicago wheat. That seems to be the upside limits as we see it here today. Last slide, as we look at South America, the planters are rolling across Mato Grosso and Paraná. Paraná indicated yesterday they're 13% planted on soybeans. That's a record for the date. So as you look at the precip here, the map on the left for the last 7 days, you can see the dispersion of rainfall and how it's really helped the north and the south and why planting is underway. Forecast on the right is for the next 2 weeks. Again, maybe we'd like to have a little more rain in portions of southern Mato Grosso or Mato Grosso do Sul, but other than that, it looks relatively good. And even the Argentinian farmers that are looking at planting their second largest corn seedings on record are going to be very active for the next 2 weeks, Ben. So as I stand back from everything, I don't want to change from bearish views, and I doubt that the rally can get too far away from us here this morning.
Yeah, I think that's right. Again, we're always talking about rallies. There are ingredients, short covering, politics. Just what do you do with them? And that's the big question, I think. And we do like managing risk. I think the last decade or so, it's always been kind of a mystery what is in store in Argentina in terms of soybeans, corn, and even wheat. And we're kind of finding out what that is given the tax holiday that we've experienced. So a lot of soybeans, about 3.5 million tons. A lot of those are sold. And so it does provide competition for the market. And that's, I think, our big thesis moving forward is, as we debate U.S. yield, there's still a lot of stuff. So be prepared to manage risk. And as always, thanks for watching. We'll be back tomorrow with all you need to know in the grain markets. Thanks.